Good morning and welcome to the BF Anderson Technical Report for December 21st. Merry Christmas, everyone. The Value Line Geometric Index is defined as the best index for the average stock. It's a very important index. It's approximately 1,700 stocks, so it's a large index. The stocks in the index all come from all the exchanges, the New York, the American, and the NASDAQ. But I think the most important thing about it is that it is equally weighted. On Wall Street, sometimes I've heard the Dow Jones referred to the Dow Jones Industrial Index as the Mickey Mouse Index, and I don't know why they call it that, but they do. But it's only 30 stocks, and it is market cap weighted so that the larger the company in the index, the more emphasis it has on the index. So it can be somewhat deceptive. Now, in the early stages of a bull market, which some people would argue this bull market started in '09, I don't agree. But what happens in the early stages, especially coming out of a recession and going into a recovery, the first group of stocks to move will be what we call the toothpaste stocks. These are very defensive type of stocks. If you need a job, the thinking is if you need a job, you're going to have to buy toothpaste to brush your teeth for your job interview. So they're called toothpaste stocks, and they tend to be defensive. They tend to pay dividends. They're not very growthy. So the liftoff, as you can see here in this graph, from '09 till recently, which was 2015, this bull market was primarily led by toothpaste stocks. Now we went into a mini bear market right here. But what's important here to understand about the Value Line Geometric Index is that the average stock has literally gone nowhere for 19.27 years. Now you can actually go back and draw this box, this price box, but unfortunately this graph doesn't go back that far. But you can go back 34 years. So basically what this means is that the average stock, the average investor has not seen any results for about 20 years. So I've seen this before. I've seen this movie before. Back in the 70s, we had a very similar situation, and a lot of you old timers out there remember that back in the 70s we had very high tax rates, and we also had very high interest rates. And so people were very distracted by putting money into municipal bonds, into corporate bonds, into government bonds, doing tax shelters, mainly oil and gas drilling deals. They were not doing stocks. There was a total distraction. So the point about this index that I think is important is that it is truly breaking out for the first time in really about 34 years. Well, you could say 20 years. And it is a legitimate breakout because the definition of a breakout in my mind is if you make a high, then you make a low, then you make a higher high and a higher low, that is a breakout. Whereas you haven't seen this before. These last three tests of this upper range has basically failed. This looks like it's going to go through. So if the argument could be made that we are starting a whole new bull market that will not include the toothpaste stocks. It's going to be more growthy. It's going to be smaller companies. It's going to be companies that you've probably never heard of before. So with that, let's get into the top five. And I really do want you to notice on the top five the change that is taking place in the market with market leadership. We're not seeing a lot of the old names that we had seen before Thanksgiving. Now this is important and very bullish because it means that the market is broadening out, that there's more than just the FANG stocks participating in this bull market. Now here's First Solar. The only thing I can say about solar that I have heard is a couple of things. One, these data centers, which are critical to a company like Amazon, which is Amazon Web Services, use a lot of electricity. Apple uses a lot of electricity. Facebook, these data centers gobble up electricity, and these technology companies are generating power using solar. Now, I'm also hearing the other thing about solar is that even without any subsidies, this technology is getting to the point where it is cheaper than natural gas and coal. Interesting. We'll just have to see what happens. Now, here's HollyFrontier. This is an oil refiner, new high. Again, things are a-changing. Now, here's a retail stock, all-time new high. Well, not all-time new high, but a recovery high, because this is a turnaround situation. But the stock is just absolutely going straight up. And notice how tight the pattern is. In other words, the institutions are in there buying, and then you get a little pullback, they come right back in again. You little pullback, come right back. Very constructive pattern. This is an interesting company. I didn't realize who they were until Matt Spencer educated me on this yesterday. This is Match.com, which is, a dating service, basically. Well, it's, again, uses data centers. Now, here's the only Chinese stock right now, the Chinese stocks have really cooled off, but this is a company called YY. They're a software company in China, have a lot to do with gaming. It's kind of a gaming situation. The pattern is not as constructive as other patterns that we're looking at, but it continues to make the top 5, and we're just going to keep an eye on it. So have a Merry Christmas. If you have any questions, please give me a call. Thank you.